Good morning. I'm delighted to be here to speak with you today. It's a pleasure to be back among our law enforcement colleagues from the Department of Justice, FBI, U.S. Attorney's offices, DHS, Treasury, and other agencies and offices of Inspectors General. And welcome to our partners from regulatory agencies, the OCC, Federal Reserve, FHFA, CFTC, SEC, NCUA, and others. As a former prosecutor in DOJ's criminal division, it was not long ago that I attended these conferences, and I know the rich opportunities that they can provide to share experiences about the latest cases, trends, and patterns, best practices, and lessons learned about fraud in the banking sector, and how it continues to evolve. It's been said that we must keep an eye on the future with a sense of the past in every passing moment of the present. And that is how I would like to approach my remarks today. I plan to talk about our FDIC Office of Inspector General, our goals and priorities, and the outstanding work of our Investigations Division, where we are today, and importantly, what we are planning for the future. At the outset, let me say that I am extremely fortunate to have had the opportunity to serve this country and the American people for more than 3 decades. It is truly an honor and privilege to lead our FDIC Office of Inspector General and our exceptional special agents. As you may know, the FDIC supervises well over half of the banks in this country, about 3,100 financial institutions, and it ensures customer deposits to the tune of nearly $10 trillion. Clearly, the FDIC plays a critical role in maintaining the stability of our financial system and in protecting the savings of millions of Americans. Also, I strongly believe in the mission of the Inspector General and the importance of robust, independent oversight. It's a unique aspect of American democracy to be able to investigate and evaluate programs and operations at government agencies and make recommendations for improvements, and to do so with integrity, veracity, objectivity, and fairness. And we are making valuable contributions by combating fraud at our financial institutions and holding individuals and organizations accountable for their wrongdoing. Simply put, we help to preserve and maintain the integrity of the nation's banking system, and we are making a difference. Our agents investigate complex, high-impact cases, a wide range of sophisticated matters involving bank fraud, embezzlement, money laundering, cybercrime, and currency manipulation. Whether it is bank executives who have caused the failures of banks or criminal organizations stealing from government-guaranteed loan programs, these cases often involve bank directors and officers, CEOs, attorneys, real estate insiders, crypto firms and exchanges, fintech companies, and international financiers. In short, we think of ourselves as an elite strike force combating banking crimes, and we pack a powerful punch. Over the past 5 years, our investigations have led to more than 550 criminal charging actions, 360 convictions, and more than $5.2 billion in monetary recoveries. You've already heard about the case against Stephen Calk, the former chairman and CEO of a bank in Chicago, where he used his position to approve millions of dollars in high-risk loans in consideration for a senior position in the prior presidential administration. And the BankServe case out of Indiana, where former officers and employees defrauded the Small Business Administration, SBA, for 13 years by fraudulently obtaining federally guaranteed loans and concealing important information about borrowers. And this afternoon, you will hear about our ghost cattle case, where a rancher in Washington state pleaded guilty to defrauding businesses out of $244 million based on fictitious, non-existent cows used as collateral. Just last week, the defendant in this case was sentenced to 11 years in federal prison for the largest criminal fraud scheme ever in Eastern Washington. Also, we're investigating a noteworthy case involving First NBC Bank in New Orleans, which had failed in 2017, causing an estimated loss to the FDIC's Deposit Insurance Fund of nearly $800 million. The indictment in this case alleged that bank officers hid important facts and substantial loan payments, made false representations about these loans in order to continue the fraud scheme, and conspired to conceal the financial condition of the bank from its board of directors, auditors, and bank examiners. Several high-level bank officials and borrowers have already pled guilty in this matter, and there is a trial against the remaining defendants coming up in early 2023. Needless to say, the work is keeping us busy. Our 1811 agents are highly experienced law enforcement officers who have specialized knowledge in finance, accounting, banking, and electronic crimes. And they're very familiar with combing through financial statements, bank records, and tracing funds. They're also practiced and accomplished in analyzing transactions, whether it be across financial institutions or in a distributed ledger blockchain. And we regularly coordinate and collaborate with our federal, state, and local law enforcement partners as a force multiplier. We work closely with U.S. attorneys' offices across the nation, as well as many sections at Main Justice: the fraud section, money laundering, computer crimes, public integrity, as well as the antitrust and civil divisions. And we participate in many interagency task forces around the country. Our office also works with the FDIC and other financial regulators to identify emerging trends and patterns of illicit behavior in the financial sector. We cover the entire country, from the islands of Hawaii to the farmlands of Iowa to Wall Street and all districts in between. We do this through our 7 regional offices and our electronic crimes unit. And we have expanded our footprint to now include field offices in South Florida and Southern Central California, where we have seen great successes. We've also recently added our Mid-Atlantic region and Headquarters Operations Group, each headed up by a special agent in charge. The Mid-Atlantic region is devoted to coordinating with U.S. attorneys' offices in the DMV, District of Columbia, Maryland, and Virginia, and surrounding geographic areas, as well as with the headquarters functions of our law enforcement partners and Main Justice. Our operations group continues to advance our investigative capabilities with specialized tools and training to empower our agents as they focus on emerging threats. And we continue to evolve and learn about the latest investigative techniques, such as the recent implementation of body-worn cameras. I'd also like to highlight the work of our Electronic Crimes Unit, ECU, an important component within our investigations division. After all, cyber is where the banking industry is and is moving, where bank regulators are going, and importantly, that's where the criminals are focused. And in the end, a cyber hacker is nothing more than a bank robber using a different sort of weapon. According to the FBI's Internet Crime Complaint Center, potential losses from cybercrime was more than $6.9 billion in 2021, and the top incidents involved ransomware, business email compromises, and the criminal use of cryptocurrency. Some estimates predict that the costs of global cybercrime will reach tens of trillions of dollars in the coming years. As a result, we have made substantial investments to develop our capabilities in the ECU and to ensure that our agents are equipped with the latest cutting-edge technology and tools to investigate financial crimes. In addition to traditional forensics capabilities, we investigate cybercrimes at banks, including computer intrusions, supply chain attacks, phishing, and denial of service. For example, we continue to focus on banking cases involving cryptocurrency and fraudulent attempts by crypto exchanges to enter the financial markets. We have seen crypto businesses circumventing financial regulations and concealing the sources of funds in violation of Know Your Customer rules, anti-money laundering regulations, and the Bank Secrecy Act. Also, we are focused on ransomware attacks against banks, where individuals infect an IT network in order to encrypt the bank's data, thus locking up its computer systems, and then demanding ransom for the decryption key. As you may know, federal bank regulators recently promulgated a rule to require banks to report significant cyber incidents, including ransomware attacks, within 72 hours of learning about the event. This rule went into effect in May of 2022, and our ECU is working to ensure early warning notifications so that we can investigate and coordinate a law enforcement response against such adversarial attacks. Further, we remain vigilant to identify complex fraud schemes involving financial technology, fintech companies, that have focused on increasing the speed of bank transactions without ever having face-to-face contact with their customers. While these fintechs provide a service of convenience, there are also increased security risks associated with this approach, including the misuse of synthetic identities. Moreover, our ECU has been focused on account takeovers and email compromises, which have resulted in some of the biggest losses involving cyber crimes. These unauthorized transfers of funds cause considerable harm to individuals, businesses, banks, and communities, and they have a significant impact on our global economy. We've already investigated and charged many overseas defendants in locations such as the United Kingdom, Spain, Germany, Nigeria, and India. And we have issued red notices through Interpol in coordination with the Department of Justice, which have led to several international detentions and extradition proceedings. Also, our office continues to develop its data analytic capabilities to use technology in order to cull through large data sets and identify anomalies that the human eye cannot ordinarily detect. After all, much of the banking information is captured in dollars and cents, bits and bytes, zeros and ones. So we are investing in our future by gathering relevant data sets, developing tools and technology, and hiring data science experts in order to marshal our resources and harness big data. We're looking for red flag indicators in the statistics and information and searching for aberrations in the underlying facts and figures. And thus, we will be able to proactively identify tips and leads for further investigations and high-impact cases, and to detect high-risk areas at the FDIC and recognizing emerging threats to the banking sector. We also continue to work closely with our partners in the IG community and the Pandemic Response Accountability Committee, PRAC, as well as at the FDIC, FinCEN, and other government agencies in order to learn from their experiences with data analytics and to further develop our own capabilities. Speaking of the PRAC, we continue to investigate many fraud cases involving the $5 trillion in pandemic relief funding from the government. From the time that the PRAC was created under the CARES Act in March of 2020, we have been proactive in investigating cases involving those who fraudulently steal from government programs funded by our taxpayer dollars and intended for those most in need during the pandemic. Since the Paycheck Protection Program was administered through our nation's banks, we have been laser focused on these crimes and the risks that they pose to banks. Indeed, our office successfully investigated the first case in the United States under the PPP program in Rhode Island just weeks after the CARES Act went into effect. To date, our PPP investigations have resulted in more than 180 criminal charging actions and 100 convictions, with monetary recoveries in excess of $149 million. So to conclude, we're focused on the future for our office, for the FDIC, for the banking sector, and the future to combat banking crimes. Our office has truly evolved to being a frontrunner in the field of financial fraud enforcement, and it is because of the hard work, dedication, and commitment of our exceptional special agents at the FDIC OIG. I would like to take this opportunity to recognize and personally thank each one of them. Because of their efforts, we have become a preeminent leader in investigating bank crimes. And a critical element to our continued success is our law enforcement partnerships represented at this conference. In short, we will continue to build upon previous accomplishments, evaluate and refine our goals and priorities, and prepare for the future. In doing so, we will continue to help preserve the integrity of our nation's banking sector. Thank you for your attention today and for letting me share my perspective. Enjoy the rest of the conference.